we choose to take these dips as opportunities, especially with the volatile stocks like we're in. When some little biotech in the middle of stage 2 drug trials, or some little, government contractor, 100 million market cap off the radar name, when that stock falls 30% in some kind of thing, and you see the CEO and the CFO and a board suddenly out into that thing, like, we're going to take advantage of that. And thanks to the fact that we see their trades pretty much real time, we can act quickly on that.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Hey, a couple of months ago, I told you about this guy, and I didn't just tell you about it. I actually signed up for his service. And I got to tell you, having been an investor for 42 years, maybe a little more, I've never come across a system like this that worked as promised, that even my thick skull can grasp the reasons behind it, and that is so simple and easy to use. And his name is Ross Givens. Ross, great to have you back. TradersAgency.com. The name of this particular service, he's got a number, is Insider Effect. Ross, look, when we talked last time, I totally grasped the logic behind the system. Insiders only buy when they believe the stock's going up. They're not perfect, but some of them are. And what also impressed me about it is you don't just say, go buy this stock, and then you're on your own. You follow up on it. You say, all right, stock went up 20%. Time to get rid of half. And sometimes it's really hard to push that trade button when you're up 20%, because you think, well, what if it goes up 100%? I missed out on 80% of the move. But then it's not like that's your last recommendation. Then another one comes up and another. And I've had some 40, 50% gains. Granted, after the correction in the past couple of weeks, the gains went down, but I had already sold half.
Right.
And as a result, on all the ones that I kept, I didn't have any profit less than 15%. And I started in literally May 29th. And, as of today, portfolio's up well over 10%. It's hard to know when, because I put more money in and it's a constant stream of recommendations. But probably if you were looking at an annualized return, just based on this 2.5 month time period, I'm looking at over 100%. Now, is it realistic to expect that? No, I don't. But it looks like, you buy this stock and then you wonder, it does nothing. And then one day, you wake up, you pull up the screen, the thing's up 20% in one day. One of them last week or 2 weeks ago that you had, I got in late. It was already up 20%, but I bought in anyway. At the peak, it was up like 60, 70%. I sold half. Yeah. I locked in 30 or 40 because I was late to the game. It's like, I don't think I'm a genius here at all. I'm just dumb.
Well, I don't think I am either. I appreciate the kind words, but you're right. And I tell people all the time, look, the idea is very straightforward. It's not a complicated strategy. Now, it does take some work to execute, to do the research, do the work. But and thank you for everything you said again. Look, I think you summed it up perfectly. It's not perfect. We're going to have some that don't make money. But on average, like we were talking about before the show, what we usually see is, again, I've been doing this for our members since 2017. So I got 6.5 years of data on this. Usually 1 out of every 4 or 5 tends to be a pretty good winner, 40, 50, 60, 70% on the stock. 1 or 2 of those are fine, up 10, 15, 20, slow grind. And then 1, maybe 2, just don't do anything. And we don't see a lot of big losers. Now, we risk, as you've seen, usually 10 to 15% on each of these stocks. So we're not cowboys anyway. But it's just rare to see big losses because of the way we're filtering the picks. We're only buying stocks where the CEO or the CFO and the vice presidents and the board members and all these top executives are buying the stock with their own money. And so to see that, especially a cluster of it, right before some terrible stock crushing news comes out is just very low. I just can't imagine a situation where they do it other than the occasional black swan event like we saw with the yen trade unfolding a couple weeks ago or something that effect. So, again, not guaranteed we will have losers, but usually our losers, like we cut a couple last week, just hadn't gone anywhere. We're up 2, 3, 4% on them, but it's like I don't want to sit on dead money. Meanwhile, DOUG, the one you were talking about, which we bought July 26th, it's been 3 weeks. It's up 60+%.
Yeah.
No, we've had others that have done even more. And so usually people don't get too worked up over the 5 or 6 or 8%, loss or want to just break even when you got a big win there to pad that, Yeah,
I had one, it hit 20%, and you said get out of it. Like 3 days later, it was down 20%. I knew that was an anomaly. And hey, you're going to have losers, but, and it was early on, but, the one thing I got to say about the system, it is a bit of a roller coaster, like it's going up, and then you have weeks like last week, the week before, gets the stuff it kicked out, but then it like goes back up the hill. And your strategy is don't wait for the car to go over the hump.
Yeah.
Sell off some on the upside and then wait and hold on. And then,
and look, it's just it's how you choose to do risk management. Everybody does one of two ways. Either you're going to sell into strength, you're going to sell into weakness. Nobody's got a plan for weakness. You got a stop loss or a trailing stop. If it rolls over, I'm going to get out. But nobody ever gets out at the top. And it's impossible if you're just trailing a stop. So you're always going to lose that last 20, 25% if you do that. So, what we do is look at his chart of the stock. Look at the average moves over the last few years. What does a good rally look like? 20%, 80%, each stock is different. And when you get something in excess of that, like, look, take some off the table when the getting's good. If you got a stock that on average makes 20, 30, 40% rallies and you're up 80% the last month, don't sit around and wait for it to crash. I'm going to sell some. Maybe it goes up 180, and I wish I had more. But like they say, you never go broke taking a profit. And I've got members to protect, and people don't have a lot of experience to say, look, you got a nice win. You're up 50% on the stock in 2 or 3 weeks. Sell half, put some money in your pocket, feel good about it. And it's just so much easier to manage the rest of that trade when you've already taken profits. So you put, let's say, $5,000 in it. It's up 50%. So you're taking $3,500 out. You still got to, so now it's easier to manage. Now you're not worried about every tick because you've already taken some. So it's easier to stay with it. And as you know, the psychological part's the toughest. And so that's what we found to work the best.
So I'm looking at, I looked at every single recommendation that you made. Okay. I tracked them back to the inception of the service, and it looked like about a third don't work out. You have sell recommendations, but then, can I share some of the open positions?
Yeah, sure.
Go ahead.
Now, on the ones that don't work out, you should tell everybody we're not talking about 40 and 50% losses here. Most of these, 10, 12, 15. I think the worst loss we ever had was 24%, and I lost sleep over that one. Usually they're 15% or less. We don't risk a lot.
Well, I'm looking at one of your first recommendations here. Well, I shouldn't say your first. Back in April 9th of 2020. Now, if you'd only bought this one and held Matador Resources, a 1,500% gain, which means a 15-fold increase here. I mean, you're not making this stuff up. This is real.
No, and look, it's not that I'm any great stock picker. It's that there's this loophole where the insiders are revealing their hands. And sometimes they just happen to be buying. Sometimes they just think it's kind of cheap or whatever. But sometimes they know something and they're exploiting that. In the case of Matador, now this was an oil stock. So you're talking April 2020. You remember oil prices went negative.
Negative.
Yeah, so it never happened before. But look, COVID happened. No one's driving. Oil prices crash. Oil stocks got hammered because it cost them $50, $60 a barrel to get this crap out of the ground. If they sell it for 80 or 90, that's good. If they can sell it for 10, they're going to go out of business. So everyone thinks this little Matador is going under, but insiders start piling in the stocks, $3 a share. We followed along. Next earnings report comes out. Turns out they had hedged all their oil production for the next 18 months. Selling futures are like $85 a barrel. So this company everybody's thinking is going to zero is totally safe. And we bought the stock at $3.50. It trades for $57 today.
Yeah, I know.
Those are the kind of outliers we're looking for. We can make a lot of money. Liquidity services were up 300%. We were up over 600 at one point. We've already sold 90% of it. A lot of these others, we get up these big. I mean, this is just the open positions. We've had many that were up 300-400%. We closed out. We took the final stop on, and I think to your point earlier, you said it was kind of a roller coaster ride. I think the reason for that, especially in a week like we saw with the big dip in the market, these are smaller stocks. The small to mid cap names, the $2, $3, $5, $10 stocks are going to be a little bit more volatile than GE and Apple, right? Especially the ones like Doug, where it's up 60% the last 2 weeks. It can afford to fall a little, and so you do see that, but I don't see our account balance takes much of a hit as it is the stocks that are already up tend to be a little more volatile after such big moves higher.
Yeah, they're going to have retracements, and their volatility, that's what I mean. Because they're smaller by nature, they have to be more volatile because the liquidity isn't there. They're more prone to emotional outbursts on the upside and the downside. One thing that you've taught me, though, from this system, I've never followed a system as religiously as this one, is you don't fall in love with these companies. They're just a ticker symbol and they're dollars. And when something happens, you get the heck out. And, the only gripe I have is, like when I used to gamble and I'd be on a streak, I would double down. But here I'm cutting back. And that goes against like human nature. But I've managed to like put my emotions aside. I read your write-up. There's a couple I didn't buy. I wish I had. But, for the most part, I just follow what you say.
Well, I'm glad to hear you say that because we put a lot of work into those write-ups. You see, it's not just a ticker symbol. It's 4, 5, 6 pages of research. I believe people should know what they own, why they own it, what the business does, what insiders are buying, and to make the decisions like you did. Say, I just disagree on this one. I don't want to take it. Or this is what I'm talking about. I want to go in heavy. And I think you should have all the information necessary to do that. So I'm glad you're getting some value out of that. But yeah, you're right. Look, I believe in dating stocks, not marrying them. We're not getting attached to the story. We're hoping that insiders are taking advantage of something the rest of us don't know. And markets, especially with small stocks, reprice them very quickly. If a stock can go up 60% in 2 weeks, whatever the heck the market didn't know, they probably know now.
Well, one thing I love being a recovering attorney myself, you say the insider that you put the most credence in when he buys is the general counsel, the in-house attorney. I got such a laugh out of that.
Well, tell me if you agree with this, because my thought, and it's the one you rarely see, right? You rarely see the general counsel buying, but when they do, lawyers, you live or die by your reputation. Even the appearance of impropriety could be damning for a career like that. And so to me, it's like, and these are usually attorneys, you might be the exception, are pretty risk averse people. So when they're taking all that into account and going, I can't pass this up and putting 300 G's into their little stock, it's like, all right, you have my attention.
I totally agree with the premise, especially when it's part of a cluster, because it's like, wow, all the big guys are doing it. All right, I'll put up a little bit myself and do it.
Yeah.
And, there's no question that the attorneys are going to be the most risk averse because usually their job is to say no.
Yeah.
And they carry that forward into their investment behavior. And the fact is, a lot of attorneys are not the best businessmen. So, but when they see the golden opportunity and they reach for it, one of the other things I really like is when I see those insiders piling in, like Matador, when the stock has gotten absolutely decimated, like Doug. The stock is just trading. It's a shadow of its former self. That one, that confidence, unless they're doing window dressing and they're just buying for the appearance, seems to be a really powerful indicator too.
Yeah, and look, timing bottoms, as you know, it can be extremely profitable. It can also be very difficult with traditional stocks. Like, oh, it was 10, now it's 5, I want to buy. Well, you're not going to feel good when it goes to 1. You need something that says either it's ridiculously cheap or things are turning around or not as bad as the Wall Street thinks. And so a cluster of insider buying is one thing. that can signal that to us, and you made a good point, the window dressing. People, I hold these live webinars every couple of weeks and I get, oh, Ross, I saw that this CEO bought this stock. Should I buy it? And I'm like, that's the problem. You have one little piece of data. You don't know, did he buy every month? Does he normally put $1 million in and now he's only putting 100,000, right? Or the window dressing, are they new to the company? This is something I see all the time. A new CEO, CFO, board member gets appointed. First thing they do inside the first 3 months is go put $200,000 in a stock. And I call it a show of faith buy. We're just trying to show, hey, I believe in this company. I've got skin in the game. So we're looking for the situations where those same people haven't done anything in 5.5 years. Now they're suddenly going in with these huge trades, bigger than they've ever made. And again, nothing's guaranteed. But if you give me a pick between a stock like NVIDIA, where the CEO is selling tens of millions of dollars worth every day, and a stock that's trading at 5-year lows, where the CEO is putting 5 times his annual salary into the stock, I'm going to take the latter. And I think that's why our returns have been so consistent over the years. I mean, even 2022, we made money. A year like 2020, we made a fortune, Kerry. I think our stock portfolio, and this is assuming 20% per stock, right? Just make it even. I think we were 370% that year, because some of those stocks, I mean, you remember 2020, things just went nuts, and we're getting small caps. Insiders are tipping us off. Some of them are crypto miners. I mean, we were seeing 400% or 500% stock gains in there, and just had a phenomenal year. So, there are bear markets. There are times when everything's going to go down. We've recommended stocks to go down and then eventually went back up, but we're not going to take much risk with it. But, we've beaten the market every year, not every trade, not every month, but over quarters, over years. This fairly simple strategy has proven to outperform, at least in the last 6.5 years we've been doing it.
Okay. And I'm a believer because I've followed these insider traders, insiders buying their shares for a long time, but your system gives you all the info and puts it in perspective. I love the concept of the perfect insider, always makes money on any company they're involved with. That's
and it's another important part of it. We look at their track record. It's not overly complicated. Just like you, if you said, Ross, I'm telling you, this is the trade, put $100,000 in it, and be like, all right, show me your track record for 10 years. If you consistently lose money, I'm not going to listen to you. But if you're showing me, hey, this Kerry makes 50% a year, he's going ham on this one, I'm far more inclined to trust you, right? So there's some insiders who aren't any good, who don't know anything. There's politicians who are terrible stock traders too, but there's some like Pelosi who are very good. And so if they always buy the lows, they always buy before big news, you do yourself a favor by paying attention when they trade again.
So I know a lot of you out there, you follow the hedge funds, the big institutional investors, but that's not as good as this, is it, Ross?
I don't think so, because hedge funds, I mean, even though they spend a lot of money on research, there's no way you can have the same knowledge of that company as the freaking chief financial officer, as the CEO, as the chairman of the board, right? The two other things about hedge funds. One is they're not betting their own money, so they're far more inclined to take outsized risks. I mean, I'm following people who go home to their wife or husband and say, honey, I'd like to take $500,000 out of savings and put it into my little biotech stock. Here's why. And the second thing is, even if the hedge funds were that good, which some are, you don't have real-time access. Hedge funds they report 45 days after the end of the quarter, right? Buffett revealed he'd sold his Apple position. Yeah, in April and May, like it's August. That's not helping me now. Insiders have to report almost immediately. They have 48 hours to report their trades. We can see those instantly. Most do it the same day. So 9 times out of 10, they buy Monday, Tuesday morning. And that's much more actionable to me than this 90-day lag time following a hedge fund or a 45-day lag time with a politician. So for those reasons, yes, I think this is superior to following hedge funds.
So the market, the volatility. Obviously, volatility is our friend in this case, but it can be your enemy. What do you think the bull market's going to resume? Interest rates going down? Doesn't matter. What do you think?
Yeah, I think the bull market resumes. I mean, if we get shocked and we get a Kamala presidency, I think you're going to have a big, big scare, at least initially, on that data. But yeah, when you look at market, look, the stock market's an auction, no different than eBay, right? It's buyers and sellers trying to agree on price. And stocks are no different than any other asset. Housing, gold, cars, you name it. If the price is right, people are going to buy. So when you get a shock event like we saw from Japan, the market falls, 10% in a couple of days, are big investors buying at 10% off prices? If they're not, and the stock just squats, that's a bad sign. But we've seen a really strong rally the last 10 trading days. I think the S&P's up 7 or 8%, just higher high every single day. And so when it comes to individual stocks, someone once taught me, you want to buy tennis balls and sell eggs, right? When a stock dips, does it bounce right back up, or does it just squat and splat there on the pavement? And so if you got a stock that's at $40, suddenly it's at 20 next week. Well, if it can't go up from 20, if nobody wants to buy it at half off, that's not a good sign. There's no demand, is probably going lower. On the other hand, NVIDIA's trading 110. If it went to 50 tomorrow, I bet you'd see a pretty quick bounce from a lot of people who would take advantage of that dip. So that's what we look at. And right now, the market is speaking pretty clearly. They're buying, they're taking advantage of the dip. As you said, rates are coming off. Freaking Powell, maybe eventually gives us a rate cut that he's been promising for the last 12 months, but the 10 years down pretty significantly the last couple of weeks. They're already pricing him in. So, yeah, I think especially under a Trump presidency, who is, like him or hate him, historically a pro-jobs, deregulation, lower taxes, all things that are good for the market. He's priced in to win. That boosts stocks. We get rates lower. I'm very bullish. Do I think NVIDIA is going to double from here? No, I think that one's probably near the top of the bubble. But I'm still very, very bullish on the market. Yeah.
Right. Hey, so, like one thing is we often have these dead cat bounces when we take a hit like we did the past few weeks. But in this case, this dead cat's got a lot of life in it here. Like you were saying, it's bounced back and continued to. And like you say, higher highs and higher lows. So, and there haven't been that many down days really since it ended. So I'm with you on that count.
Yeah. Yeah. And look, anything can happen. I'm not discounting that, but, we choose to take these dips as opportunities, especially with the volatile stocks like we're in. When some little biotech in the middle of stage 2 drug trials, or some little, government contractor, 100 million market cap off the radar name, when that stock falls 30% in some kind of thing, and you see the CEO and the CFO and a board suddenly out into that thing, like, we're going to take advantage of that. And thanks to the fact that we see their trades pretty much real time, we can act quickly on that. Unlike following Buffett or somebody like, oh, yeah, he did buy the dip. Wish I knew that was going on. He didn't.
Hey, so you got some other services?
We do. We have a couple other things we do. One being, follow these institutional stocks, following where we see those institutional dollars flowing, which is, what moves the markets. And we do a couple other things as well. But by far the most consistent, the thing we've been doing the longest with the best track record, is following these insiders. And, for very, very active traders, it may more than we put out on average like 4 or 5 stocks a month. Now they're each they're well researched, they're vetted. It's a full idea. We're not risking a lot. I think it still returns or produces great returns. But we do have some other services where we're taking 4 or 5 trades a week, a little more active, trying to scalp, 10, 12, 15, 20% returns for those kind of people. But especially for passive investors, I think this insider approach is the easiest to follow, makes the most sense. The idea is very logical and sound, and it's extremely easy to follow and execute. We've got, as you know, full support staff and all as well. People need to call in and have any.
Yeah, that's appreciated too. All right. Well, hey, appreciate you coming on, Ross. I'm glad to be able to share my experiences with your service. We got a link in the show notes to sign up for a webinar. I highly recommend you do it. I mean, there's no guarantees in life, but at this point in life, with my experience, I don't get excited over much. This, having actually experienced it, seeing these returns go up, I'm a believer. So take a look, click the link. Ross, we'll definitely have you back on again, especially if the market makes some gyrations, to get your view on it. Appreciate you coming on. We'll talk to you again soon.
All right. Thanks, Kerry. Always good to talk with you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now. more than ever.